Hi everyone, Shuzafat Bless here from Tradable Online Services, and today we'll be talking about moving averages. So you get a chance to discover what they are, what they do, how best you could use them to maximize your entries on the forex market, or even actually get to start trading with them. Alright, so maybe you're a guy that's not so used to moving averages, you usually do not deal with moving averages. You get to discover them today and what they are. So starting off with our risk warning, trading leverage products such as forex derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please pause this video, take a good look at this, and ensure you fully understand what you're doing before proceeding. Alright, so let's get to it. So a moving average is an indicator that shows the average value of a price over a period of time. Right? Maybe the 1 minute, I said maybe, sorry, either the 1 minute, 5 minutes, 15 minutes, 30 minutes, H1, H4, 1 day, 1 month, and so forth. As you know it on the MetaTrader platforms, it shows the average value of the price over and over those periods of time. So it usually forms up in a very it's a slopey kind of trend that you see all around the price. So we get to see these things actually on the market right now on the MT4 trading platform, so don't worry about that. So it's usually plotted along with the closing of the price. So from the beginning of the price, the indicator actually calculates the average value of that price over and over and over again. So maybe if it's on the 1 minute time frame, you'll be having those the average value being showed up, being represented, all right, in the form of a line always following the closing of the price. If it's an indicator of the 5 minutes, then you're going to calculate it over every 5 minutes. If it's in the case of the 15 minutes, you're going to be having the indicator calculate the average true value every 15 minutes. Now you're not going to be seeing this indicator as calculating, like doing the maths and all that. It does all that in the background. All right, that's why it's an indicator. Okay, so let's move on. So what are they used for? Okay, so moving averages, these are the major uses of moving averages. All right, well, I'm going to take a step further in this basic introduction of moving averages to show you the most used moving averages in the forex industry, and also in the stocks, in terms of trading stocks. But I think we'll focus more on forex. All right, you could use them on binary as well, but this is majorly more on forex. All right, and maybe other trading platforms on the financial market. All right, so we have the uses here. All right, so they are used to determine the trend of the market price. All right, sorry, input price. Market price, the trend of market price is primarily one of the major first things that you would recognize or observe once you see the moving average, right? Because you see, like I said, it's a line that follows the closing of the price. So you're going to be seeing the chart up above it, and then it just follows, you just see the line going up or going down. So that indicates very easily the price of the market price of maybe a currency pair, a stock, and also that. So it's also used to spot out dynamic supports and resistances of a price. All right, so you have at times where the market we have this, the market moves in three directions majorly: uptrend, downtrend, or in a consolidation. All right, so that market doesn't move out straight. It either moves in a corrective, in an impulsive and corrective, or an impulse and retracement, like some of you know it to be. Right, impulse retracement. Market never moves in a straight line. All right, so it either moves like this, like this, like this, like this, like this, or like this, like this, like this, like this, like this, and that's a downtrend. All right, so that's sorry about that. That's what you have as a trade of the market. So it determines the dynamic supports and resistance of the price. I'm going to be showing you guys all these things in actual time, so you're able to understand it better. So it also helps to generate trading signals along with instead of entry and exit rules that you form, creating your own trading strategy. But there are already proven trading strategies using the moving averages on ground, so you could just do it to get to know them. All right, so let's get to some examples on the MT4 trading platform, and I also show you how to install them as well, so you could know that. So here is sorry about this. Okay, so here is the MetaTrader platform. All right, and here you are. So what you're seeing here are the moving average. You can see that that's a 200 moving average. That's the period is 200, right? uh, it's a simple moving average. We're not going to go into too much details about what simple, exponential, smoothed, and like linear weighted. All right, is applied to the close, which is mostly the default setting of all moving averages. All right, so we're using a red and then a bit thicker in terms of its representation here. So we have the second moving average, which is the 50 moving average. All right, that's the period. So you could see how here I could edit these numbers and change to 24. I could have these unacceptable characters, sorry. I could have the 400 moving average. I could have the 90 moving average. I could even have the 2 moving average. All right, and I just have to click OK, and that's it. So like I told you guys earlier, that we're going to be telling you the major moving averages that are used in trading forex. All right, and these moving averages are they are majorly used for a strategy called the bounce strategy. All right, so guys, let me know in the description, in the comment section of this video, whether you want us to no, I think we'll be releasing a video. All right, we'll be releasing some content on that. All right, on the bounce strategy and how to trade it. All right, so you have the 200 moving average, the 50 moving average, and then the 18 moving average here. Let me just you see that all exponential 50, and then the 200 is the only one that is the simple moving average, as you have it there. All right, so these are the most used moving averages. Some people actually add the 6 EMA, and let me use that as an example to show you guys how to add moving average. So you clearly go here and then trend, in case you do not have it here. All right, just in case you don't have here, just go to trend. You have moving average there, and then you choose the period. So we're using 6 in this case. We're adding a 6 moving average. Right, so that's 6. It's going to be exponential, then close. Of course, I already have a blue the 50 moving average in a blue color setting, so I'm going to change this color to let's take that gray. All right, I think this is okay, and okay. So you see that the moving average has been added to the price, and this is it here. All right, so this is a very small one, 6 moving average. So some people actually use this, all right, to know when the price is surfing a particular moving average. But personally, I use the 18 because it's actually more it's more like it's just better actually. Most times for the price to be surfing the 6 moving average as you have it here, is very, very rare. All right, very, very rare. Most times that you see it, that you could actually consider it surfing, it's the 18 moving average, and it's very easy to identify an entry as well with the 18. So that's why I do not use the 6 moving average. All right, so those are the 3 kinds of moving averages. You can see, looking at this chart, you could easily determine that it's in a downtrend because this 200 moving average is on top, right, and it's a very, very reliable moving average. I give you guys that. All right, very important. The 200 moving average is very reliable. So you could see that it's clearing a downtrend. All right, and when all of them cross the moving average, when the price crosses the moving averages, you could see that it's an uptrend. So that's very easy and pretty simple to spot out. This is the Euro USD, as you can see on the 15 minutes. All right, this is the 1 minute. You have the moving averages everywhere. All right, you have them everywhere. Like I said, it's calculated per minute. If you want it on the M5, it's going to calculate it every 5 minutes, 15 minutes, 30, day 1, 1 day, and all that. So you have it as it is there. So that's a bit about moving averages. We're going to be dropping further contents on how to trade the moving average, and we're going to actually be explaining the bounce strategy, and yeah, so that's will help you to also profit from that on the forex market. So hope you enjoyed this video. Thank you very much for following, and have a blessed day.